how to get ahead of 99% of traders when you're using fractal structure. Now we're going to carry on in this series with understanding how you can apply fractal structure and look for that reversal using the fractal structure. If you haven't watched the first video in this series, I do suggest going through and watching that first. I'll leave a link above now so you can watch that. Then make sure you come back and watch this next video. So understanding the use of fractal structure will help you identify that trading range. I'll go through this pound US dollar pair on a 4-hour time frame. We don't need to go far back in price to do this. We're just going to go from current price here on the chart for me to demonstrate to you the correct procedure when you're using a fractal structure. Now, everything in this video, okay, is going to be simply just showing you a potential short in the market, but we just reverse everything if we're looking for those longs. And of course, if you want to learn more, okay, on this type of fractal structure trading, make sure you drop a comment down below and you want to see more videos covering this type of trading. So let me just go through first understanding the structure in the market. So we're looking at where the market is going to break higher. Okay, so we've broken structure head to the upside. This leaves me this swing low when we broke the upside here. Then we're looking for the market to break lower. So we've broken up, okay, bullish market, and then we've broken back down the close of this candle. Yes, this single little candle, small body, is still a valid breaker structure. It broke and closed through this swing low. If it was just a wick like this, we were looking more at sweeps in the market, understanding it's a liquidity grab, and we could have seen a bullish move. And again, if you want to learn more on understanding liquidity, there's a full playlist in this channel. I'll also leave a link for that above now for you to check that out. So if we look at this as a breaker structure, the market starts to pull back here. We would look at this swing high. Okay. In fact, I got the wrong tool. This would be our strong high in the market. And this would become our weak low, where we're expecting markets want to pull back and run to. So understanding this is our swing structure on our trading range. Now, we can now also apply the fractal structure. Now, again, if you haven't watched the first video, you really need to watch that because you understand how to apply the fractal structure. So now looking at this movement in the market, my fractal reversal area was here. We then created this as a new fractal high, okay? And then we created this as a new fractal low. Again, you'll understand this more once you've gone through that first video. This then gives me a new trading range, okay? It's a fractal trading range. This is my swing structure trading range from this high to this low, and this is my fractal trading range. What does that mean? That means we can look for a pullback instead, okay, within this trading range. So we don't have to look for a full 50% pullback and mark it out for you for this movement, okay? You can look for a pullback within this range instead. And you can see that price never actually got to that level even, okay? So we never got to the premium area of this swing structure, but we did go into premium area on this fractal structure. How do you know when to use it? Well, what do we have here to the downside? We have a base drop area of supply, leaving over a nice area of imbalance, okay? Two nice imbalance candles. That means price is likely to come back into these imbalance zones, hold of the area, and push lower. Okay, if this wasn't here, then I would look at probably using the full swing. And I'll demonstrate that at this last area of price in a moment. But once we see this, we can look for price to pull back into the 50%. And I prefer to see price push through, okay, close through into the area above, okay. Doesn't have to. Okay, we did create a nice looking sweep here, but I'll demonstrate to you why, okay, briefly in this video. I wouldn't be looking for a trade, but understanding that this is our trading range from this high to low, okay, we'll get rid of this level now. We don't need it, and we don't need this high really either. So we know, in fact, let's get rid of all these lines, make this nice and clear for you. We know this is our trading range. As price pulls back up here, let me demonstrate to you. We have this level here. This is the last bullish imbalance, okay? Price comes back to it after we bounced off the 50% area. And look, we create a reversal. We held at that area and we went higher. We then create a new area of imbalance. Price held and we pushed higher again, creating a new area of imbalance. which held price here, and then eventually we closed through that bearish candle. So if you're just trading the candle by candle approach, you can see this bearish candle gave me a potential sell. Now this is all understanding the use of imbalances. And once again, yes, you're right. There's a full playlist in this channel that goes through the imbalances. I'll leave that linked above now if you want to check that out. And it will show you exactly how we look at using a candle by candle approach. Now we can also look at the fractal structure, okay, on a lower time frame, but this fractal structure means at this point we would expect price to either break this high, okay, of this fractal structure, or to break this low here on the low of the fractal structure. Now on this occasion we broke lower, okay, so our fractal structure range was from here to here. We pulled back. Once we pull back into above this area, into premium prices, we'll go down to a lower time frame to look for that entry to run for this low. I'm going to demonstrate that right now, how I look for a trade. I'll go to 15-minute. And you can see here on the 15, okay, I already went through why I wouldn't be looking for a long-term trade on the lower time frames around this area because of the bullish imbalances we saw. But if you want to just have a quick look, you can see that the market, okay, we did push through on a 15-minute, but we only wicked through on a 4-hour. We can also identify, okay, we had a break of structure here to the upside, okay, then we broke lower here, and the market started to go lower until we finally broke lower and reversed structure again to the upside. Now, many will be looking at this price action and potentially be looking at this area here of supply, which is valid, okay, and you could look for a sell out of here, but you wouldn't obviously have made it back to this low, okay. But the idea is understanding this is a drop-based drop area of supply, which would have worked, okay, and you would look for smaller targets. That's fine, but what we're looking for is to go with the 4-hour time frame. And I like to see price pushing up through and above, okay, into this premium era on this fractal swing pullback. So this is a sort of price action that I would like to see, okay, where price is pushed through into that premium area. Now, once we're in here, there's a few things we can look at, okay. Some of you may use trend lines. So we have a trend line here, you can see, and price breaks through the trend line, pulls back, actually comes back towards that trend line, okay, and then we fall off towards the low. You can see the low is hit. Okay, yeah, this might be in hindsight, but it's good education for you to understand how to read these areas. So when we're inside this area, what we look for, we start to look for that structure. You can see the market here continues higher, okay, breaks structure. This is a sweep, okay, and I expect once these sweeps occur, see this low get run, and if it does, that's a potential shift in structure. We do. This is the main swing low we want to see broken, which it is over here. Okay, that's a main structure shift. Now you can see how this happens at the same time as we break out of that trend line. So many people use trend lines for these types of reversals, which is absolutely fine. Now it's not the way I normally use myself, but what I want to show you is an early indication that the market is shifting. I'm going to go through where you could have taken entry, understanding everything put together. So we have here, let me show you, we have a break to the upside, okay, and this would then be my fractal low. We have another break to the upside, and this would be my fractal low, and then we have this is a new fractal high. The market pulls back, this candle pushes through this low, gives me a new fractal high, and at this point it also gives me this area of supply. Now, supply and demand, if you're not sure about that, okay, there's a full playlist in this channel as well. It goes through every step you need to understand using supply and demand. And if you want to take that even further, I do suggest checking out the Profit per Trade workshop. Okay, I will leave a link above for that now, and there's one in the description of this video. But we're looking for the market to pull back into this area, okay, and then you can look for the market to want to run this low. So let me just move this line, this low here, okay, is in our weak low. So you can see the market has shifted structure, okay, pulled back, and then we continue for this level. Now that's understanding the fractal reversal. That happens right here in the market, okay. Now, again, I hope you've been through and watched that first video. That would demonstrate much more about the fractal reversal. Okay, that shows you here the fractal reversal on this candle. Price pulls back. Now you could even record an entry on this candle on a pullback if you wish. Okay, didn't have to look for this pullback, and the markets would have pushed lower, and potentially you've been looking for perhaps this low to be run, which it just about is. So that is the understanding of the fractal reversal, okay, or the fractal structure reversing when we see the market pulling back in this area. But if you want to be more on the cautious side, what we need to do, if we go back to that 4-hour time frame, let's go back to current price. Okay, what we need to look for here is where do we see the market reversing? We see it reversing on this candle. So mark that off. So we're inside this trading range. We've pulled back. Okay, what we're looking for is that reversal of this level here. Okay, it just about happens on that candle. I'd say probably for safety, we'd look for this candle to close down. So views then potentially you could say, right, we're going to sell. We've pulled back above the 50%. We're reversed. Okay, and that's understanding candle approach. This would be my entry for my target. And we're just about a 2-to-1 risk to reward. That's the entry. Yeah, it's just under 2-to-1 risk to reward. Okay, that's not a bad quick trade to take. Okay, it's putting profits into your bank. So understanding we reverse this bullish imbalance on the pullback within this fractal range. Now we use that understanding that this is a fractal range, not the swing range, and we look for that reversal out. Absolutely perfect entry to take, and it works. How can we increase that risk to reward? We wait for the close of that candle. We go down to 15-minute. This is where you apply market structure and use your supply and demand. So here we can understand that the market is now bearish, okay, with a nice bearish trend. Where's your last break of structure? Right here. Where's our last area of supply? What's the full zone is here. But I would then look at marking out, okay, this swing. Where is my swing? Okay, from this high to this low. Let's just double check, move this line. Okay, so it's actually deeper than I thought. So it actually goes down to here. I would actually bring my entry to this next bullish candle. That would be my entry. I understand it's above that 50%. That's where I want to be seeing my entries come in. So that would be my entry. This would then be my stop, my target in the same place. We've gone from a 2-to-1 risk to reward, okay, to a 5-to-1 risk to reward. And that is how you increase your risk to rewards. And that's how you get ahead of 99% of other traders. Understanding the nature of fractal structure. Now, if you want to learn more, okay, on fractal structure in more detail, then you need to check out that trading coaching experience, and there'll be a link popping up for that right now. And make sure you go and watch the next video in this series. If there's not already a video there for you to watch, then go and watch one of those playlists that I mentioned throughout this video.